As expected, at this week's Fed meeting, the Federal Reserve held the baseline interest rate and indicated that we still anticipate 3 rate hikes later this year. The biggest question has always been, when will we start to see the first dip in interest rates? And as the CME futures chart still shows, June continues to be the target with the highest percentage of around 60% that we finally see that 25 basis point drop that we've all been anticipating. This will all come down to inflation. And as we've seen inflation drop all the way from its high of 9% down to 3%, that mark of moving from 3% to 2% has been a little tricky and remains sticky. If we can start to get that positive momentum on inflation declining closer to that 2% target, the Fed will be more inclined to be aggressive with rate cuts. A good sign for potential home buyers continues to be the increase in available home inventory. We saw another week of an upward trend, 1.3%. And year over year to the same time last year, we're up over 22%. Go back 2 years to the bottom level of available inventory, which was 2022, we are up over 105% from the same time that year. So even though our current inventory now stands at above 507,000, for context, we're still well below our 2015 mark, which was over 982,000 available homes. So as we are seeing signs of positive momentum for inventory, we still have a long way to go. I wish more people understood the difference between good debt and bad debt. This Bloomberg story states that Americans now pay as much interest on other debt as they do their mortgage. The reason I say mortgage is good debt is because of the many tax benefits that come with it. We also have the ability to continue to gain on an appreciating asset. So as you pay down the balance of your mortgage, that asset or value continues to go up, gaining equity in the process. Your other debt can make no such claims. So if you can, pay off your debt and use a mortgage to buy your home. Or if you already have a mortgage, look into using your equity to potentially get yourself out of that other debt. Hopefully, you understand the difference between good or bad decision with your money.